Hello, my fellow insurables. I'm Kelli with Arrow Final Expense, and today we'll go over dividends in whole life insurance. And be sure to stay tuned till the end when I tell you exactly how and when you can pick how your dividends will be paid. If you're new to my channel, you'll get the best tips, facts, and honest information about life insurance. So first things first, what are dividends? Well, they are a percentage of the insurance company's profits that are paid out to the policyholder on the policy anniversary date every year. This would be similar to any conventional investment dividend, which represent a public company's profit share. So when a whole life policy does pay a dividend, it is considered a participating policy. A participating policy is one that does share in the company's profits. However, not every whole life policy is a participating policy, meaning not every whole life policy is going to pay a dividend. A non-participating policy will be less expensive annually, but it won't provide the same long-term value in regards to investment returns. Now, generally, the amount of the dividend will be determined by the sum you've paid into the policy. So let's say you have a $100,000 policy with a 2% dividend. That means it will pay $2,000 annually. Dividends on a whole life policy can be guaranteed or non-guaranteed, and this will all depend on your policy. And so it is important that you look through all of your policy details before you purchase a policy, so you do know whether the dividend is guaranteed or not guaranteed. A guaranteed dividend policy will typically have higher premiums to compensate for the added risk the insurance company takes on. A non-guaranteed dividend policy may have lower rates, but there is a risk that no dividend will be paid in a given year. And now that we know what dividends are, and how a participating and a non-participating policy work, let's talk about how you can use your dividends. And there's quite a few options, but we're going to go over the most common ones. So number one, and this is going to be pretty obvious, a check. You can request that the insurance company send you a check for that dividend amount. Number two, premium deductions. You can request that the dividend be put towards future premiums owed to reduce the expense. Number three, hey, buy some additional insurance, and that's pretty self-explanatory. Take that dividend and put it towards additional insurance. Purchase more insurance. Number four, you can put it towards your cash value. And the reason you would do this is because you can borrow or withdraw from your cash value later. Number five, use that money to pay off any outstanding policy loans you may have. And you'll want to do this because any outstanding loans will be deducted from the death benefit when you die. Now for some good news and something else to consider, dividends are typically not taxed as income, but they're seen rather as a return of premium, no matter how you use the money. Now, when you are looking at a whole life policy that pays a dividend, you need to look at how is that dividend calculated, if the policy is guaranteed, and how you'll use that dividend. Now, here's what I was talking about earlier. When applying, you may choose to receive your dividend payment one way, but even after the policy is started, you can typically change the way that you will receive your dividend, but be sure to ask. Now, there's certainly more to a good whole life insurance policy than just the dividend, and as I mentioned before, be sure to go over all the policy details and review it before you sign or start a policy, because you want to make sure the policy is not only right for you, but that it's right for your budget. So there we have it. That is a quick overview of how dividends in a whole life insurance policy work. If you have any questions about today's topic or another life insurance topic, let me know down in the comments. And if you want to continue to get the best tips, facts, and honest information, please like and subscribe, and I'll see you guys next time. You can request that the